I would tell people, keep your expectations down, keep stacking silver. And if something does happen, it's just a cherry on top of but not, of the ice cream or whatever. It's just a little extra. So that's how I see it. But in the fiat currency era since 1971, whenever you have a major blow off or bull market, let's say in precious metals, silver comes late to the party, but then at the end it leads. So I think there's still a lot of potential for silver. You just need to be patient.
MarioInnecco from the YouTube channel MarioInnecco64 believes that a slow but inevitable monetary reset centered around gold is already underway. A major driver of this shift is the persistent and significant accumulation of gold by central banks, which have collectively purchased at least 1,000 tons annually over the past 3 years. This strong institutional demand remains a key pillar supporting the long-term investment case for gold, signaling a growing lack of confidence in fiat currencies, particularly the US dollar. Innecco points to the Dow-to-gold ratio as a critical indicator of where we are in this monetary transition. Currently hovering around 13, the ratio has decreased from its earlier peak of 11. He believes this consolidation may precede a more dramatic move lower, possibly toward 1, which would represent a profound revaluation of gold relative to financial assets like equities. This view aligns with other voices in the precious metals space, including mining equity investor Jenny Shaigec, known online as Jenny Many Dots, who noted in a tweet, Dow-gold ratio ran approximately 19 in 2024, far larger than the historic mean of 9.7 or median of 5.5. If this trend were to continue, the ratio would revert to something below 5.5, quite possibly even to its historic low of one single quote, current approximately 12.87. This growing momentum toward gold is part of a broader loss of trust in fiat-based monetary systems. Innecco argues that a turning point came in 2022 when the US froze Russia's foreign reserves following the start of the Ukraine conflict. That move served as a wake-up call to other nations, showing that dollar-denominated reserves can be politically weaponized and are not as secure as once assumed. The trend has continued to accelerate in 2025. The US dollar just recorded its worst first half of the year in over 5 decades, a collapse driven by mounting geopolitical instability and the return of trade wars under President Donald Trump. Investors have grown increasingly uneasy about the long-term sustainability of U.S. debt and the credibility of the dollar as a safe haven asset. Trump's big, beautiful budget bill expected to add trillions more to the national debt has further rattled confidence, sparking an exodus from dollar-based assets and reinforcing gold's role as a trusted monetary anchor in times of systemic uncertainty. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Unlike in the 1930s, early 1930s, gold is not part of the monetary system. So FDR, he did a reset on January 30th, 1934, and revalued the price of gold versus the currency, the dollar, from $20.67 to 35. So that was a reset there. At the time, the Dow gold ratio was around 2. And then the next reset was in 1980, and that was a market reset, just like we're seeing now. And in 1980, gold traded up above 850. The Dow was at 850. So the Dow gold ratio was 1-to-1. I think the Fed's balance sheet was 120% backed by gold. So gold was way overvalued, and we could start again inflating the system like they did for the next 40 years. So yeah, that's how I see it. And right now, for example, the Dow gold ratio is around 13. It has gone down a lot this year, but it has been around 11. I think it was beginning of April. It's now rebounded, but I think it's consolidating. And I expect that ratio to go to 1 in the next few years, the Dow gold ratio. As per triggers, I think it's already happened, really. The major one, I think, was when they froze Russia's reserves back in 2022, when the Ukraine-Russia conflict started. And yeah, that it's de-dollarization. Yes, there could be an event that like accelerates it. And like Taylor said, it's difficult to tell. There's a lot of candidates. Maybe even like what's happening now to the dollar, breaking this key support here on the dollar index. It could be Trump nominating very dovish chair of the Federal Reserve. There's rumors that he wants to come out early, like soon, and say who he's going to nominate, even though Powell is there until May next year. So yeah, that could be a trigger or some geopolitical event. We've got the BRICS summit in Rio, July 6th and 7th. They could announce something vis-a-vis gold and their monetary architecture. Not surprising. I think central banks are going to continue to accumulate gold. And we also saw recently that Italy and Germany, a lot of pressure groups there want them to repatriate like a quarter of $1 trillion of gold they hold with the New York Fed. So the faith and confidence in the dollar and the financial system in the U.S. is waning. I also saw a report from OMFIF. It's an independent think tank for central banking, and they did a survey as well. And they found gold, the euro, and the yuan now are picking up relative to the dollar. The dollar used to be the top pick in the previous survey last year. Now it's number 7. And one of the respondents to the survey, or actually the OMFIF, said that a lot of central banks plan to double down on acquiring gold. So I think it's going to get even that 1,000 tons that we've seen on average the last 3.5 years or so. That could be increasing quite a bit, I think. So I agree with Taylor. The fiat currency reserve system, because that's what it is, holding U.S. debt as reserve, is on its way out, and gold will be the beneficiary. Yeah, I guess it depends what do you liquidate your gold for? I don't think I will ever liquidate a big amount of gold for fiat currency anymore, because even if gold goes parabolic, why would you want to? That means that the fiat currency system is dying. Why would you want to exchange it for dying currencies? But as you said, in the Weimar Republic, there's a story of a young man who got left a $20 gold piece, which is just under an ounce, and he was able to start a hotel business with that. I saw recently that Incrementum did a little analysis of the Porsche gold ratio, and you needed 235 ounces to buy a Porsche 911 in 2000. Now it's down to like 40. So yeah, maybe when it gets to 10, people might want to swap 10 ounces of gold for a Porsche, even though when that happens, the world will be a lot more unstable. There will be a lot more crime. So you might want to be careful with that. But like you said, there could be things like you want to buy a mansion or you want to buy land. That's never off the table. But in terms of savings, I think, like you said in the questions that you sent us before this interview, that it's also generational wealth. You try to keep it for your children and grandchildren. I think that's also important. I guess we're always hopeful that it doesn't, but I don't really expect the powers that be, who have been charged for centuries, if not thousands of years, the concept. I don't think they're gonna like give up before giving it, fighting really hard, kicking and fighting to keep it going, because it's a really good gig to be able to create currency out of thin air and control everyone. So it's the last thing they're going to do is say, "Oh, we're going to stop this now and bring back sound money, and we're going to write off all debts, and everything's going to be fine. We're going to have world peace, and we're going to be really nice." So unfortunately, that's not going to happen. It's one of the reasons I've been posting stuff on YouTube for the last 10 years, is to try to warn people about it. And it's not going to be the end of the world. It will feel like the end of the world for the vast majority of people, unfortunately, because they won't know what happened.
Silver prices have surged 25.85% since the start of the year, signaling renewed strength in a market that has long tested investors' patience. MarioInnecco emphasizes that patience is key when it comes to silver. Since the end of the gold standard in 1971, silver has often been slow to respond during periods of monetary stress or inflation, but when it does move, it tends to do so with explosive momentum. On Tuesday, silver continued its upward march, trading at $36.36 per troy ounce, up 0.72% from Monday's 36.10, according to FX Street. Often overshadowed by gold, silver is now gaining renewed attention from investors who see its breakout potential as a valuable opportunity. For the first time in more than 13 years, silver has decisively pushed above the $35 level, a critical psychological and technical barrier. After spending nearly 5 years trapped in a range between $17.50 and $30, silver finally broke out above the long-standing resistance around $30 about a year ago. Since then, price action has been slow but steadily bullish, building momentum with each pullback and rally. The recent breakout is reigniting excitement in the financial markets and pointing to significant upside for those positioned in silver and related mining stocks. For investors looking to diversify into hard assets, silver now appears to be entering a new phase, potentially the early stages of a significant bull run. Let's get back to the interview.
It's positive. I mean, that 35 level was important. The next level is like 37.50 in the spot. I think we touched 37.30 last week or so. So it looks positive, in my opinion. And that 35 level could be a floor now. But like what Taylor said, I hold silver as insurance, and it's a bit more like gold is more as a wealth preservation instrument. Silver is more like a bartering instrument. It could also preserve wealth. So I think the way I view silver, and I started buying silver like a little later than I started buying gold, is that I love the old silver coins. I also have bullion coins, and that's why I hold it, because it's a really nice metal, and just like gold. And but the key with silver is to have patience, because it's been very frustrating, because everyone expects silver just to go to the moon. But it's possible that it could do. But I would tell people, keep your expectations down, keep stacking silver. And if something does happen, it's just a cherry on top of but not, of the ice cream or whatever. It's just a little extra. So that's how I see it. But in the fiat currency era since 1971, whenever you have a major blow off or bull market, let's say in precious metals, silver comes late to the party, but then at the end it leads. So I think there's still a lot of potential for silver. You just need to be patient. I mean, it should already be doing that. It should be getting people in the West to look at silver, but unfortunately, there's a competitor right now, which is cryptocurrencies and bitcoins and all the altcoins. And we even seen the bankers and the powers that be getting involved in Bitcoin and cryptocurrencies. So yeah, but it doesn't mean to say that people won't wake up to silver, but it's still early days. It just tells me that we're nowhere near a top in silver. But I think eventually one day people will realize the value of silver, even in the West. I still think it's the prettiest mare, like you said, in the stable, but there will be no alternative to the dollar in the fiat space, even though the pound, the euro, and the Swiss franc have gone up. If you look at these other currencies, they've also lost over 90% of their value versus gold in the last 50, 60 years or so. For the dollar, yeah, the dollar index today is testing some really important technical levels. There's a upward channel since 2008, the low, all-time low there, that comes in around 97.50 today. And I saw before we started that we traded as low as 96.99, and now it's at 97.20 or thereabouts. So technically, it doesn't look good. And the other thing that I've told my viewers is that if the dollar is so weak, despite the fact that the ECB, the Swiss National Bank, and other central banks have been aggressively cutting rates, can you imagine when the Fed starts cutting again? I think it could hurt the dollar even more. And yeah, that's how I see the dollar right now. I thought previously to the ceasefire, the markets were very calm considering all that was happening. Yes, crude oil did trade up, but only to around 76. And gold was pretty steady. So were stocks. So I'm not sure. I mean, if the reason to buy gold and to be long gold and commodities is necessarily the war between Iran and Israel. I know they have a ceasefire now. I don't think it's over by any stretch of the imagination. But I think, Jesse, what the powers that be in the West and the US will do is they will use it as an excuse in case the economy is slowed down. And they'll say, well, it was because of the conflict in the Middle East. So I think that's going to be used as a distraction. You never know. I think I'm not sure Iran is going to do anything silly like closing the Strait of Hormuz, because I think despite everything we hear in the mainstream and from Israel and the US that they won, I'm not too sure they won. If anything, from what I hear, the Israelis approached Iran for a ceasefire. I think they were under pressure. So I don't think Iran is going to do anything really reckless. And they know that America is not going to try to invade Iran. And that's just very, very difficult. Robert F. Kennedy Jr. said during the campaign, or just after he was nominated to the head of the health service, that 70% of Americans of fighting age are not fit to fight. So I don't think it's going to materialize. So I would focus more on the debt ceiling, the big beautiful bill, and the dollar as well, which as we speak here, made new lows here as per the dollar index.
Some shifts unfold gradually before erupting all at once, and current moves in gold and silver suggest we may be approaching such an inflection point. While gold reclaims its role as a stabilizing force amid global financial disarray, silver is no longer content to play a secondary role. Its technical breakout from a years-long range signals not only a change in price but a change in perception, as fiat systems face increased skepticism, and political events continue to weigh on confidence in traditional currencies. Both metals are being re-evaluated, not as speculative plays but as foundations for a new monetary era. Could we be witnessing the early repricing of silver's true monetary value, just as confidence in the old financial order begins to fracture? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.